focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
All right, ladies and gentlemen, I hope you're having a wonderful day, and God bless you if you made it this far in the market. But I got good news and bad news. Good news, we have catalysts coming up. We know what they are, and they can definitely cause big moves. That's the good news. Bad news is that the volatility may actually get worse from here. We were talking about it. This has been one of the slowest declines that we've seen. Well, here's the thing. After one of these catalysts tomorrow, it may actually start to pick up. So I'm going to go over all of that. We're going to talk about what happened in the market today. I have a bunch of plays that I want to look at, but more so the strategy. We kind of switched it up today, and we saw some decent results, but we got to talk about premium. This was part of today. If you didn't see Kohl's, and even after hours, there was some bad misses, so we're going to see how it is. But Kohl's, they were down as much as 9% at one point. However, every single put option got clapped. It did not trade like Target did. So we got to talk about that, how you're going to make money off of it, and the kind of new strategy, which is old, but we're going to go over that. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. First link, okay? We'll see you there. I love you, and God bless the chat, baby. Keep holding it down. Keep fighting, baby. But let's talk about today before we get into the catalyst. What happened? Nothing. So we had a lot of moves. We got a little mini gap down, but you can see we didn't do much. And if there was anything that was weird today, it was actually the fact that the VIX dropped 9%, even though we actually closed red. So that was part of it. There was little pieces of news here and there, but people were responding to earnings. And now this is where we got a little bit of the balance back and forth. The industry, shout out to Andres, baby. If you haven't noticed, we've been bringing this up a lot because this is very important, especially with this volatility, the rotations, what's a safe haven, what's not. But today, you see we had a lot of weird moves, but materials, healthcare, consumer discretionary real estate, those are kind of up at the top, but those are the defensive names. And what do you notice? Consumer staples was the worst, and then consumer discretionary, it was actually the best throughout the day, but then it ended up flipping right there. But the whole point is you had some safe havens getting bid. Tech surprisingly was strong throughout the day. You even saw a lot of growth names, like even Roblox did good, Shopify, but it was a really mixed bag there. But they were actually doing good throughout the day and then ended up at the lows. But we didn't have any news. If there was any big event today, Finland and Sweden, Joe Biden had a press conference. He said they're welcoming them to NATO, so there might be escalation on the Russian side. We'll see. Always just watch oil. You don't have to get too into it. Again, watch the energy pricing. And then even on that note, they also passed in the House that energy limit bill. It's very, very broad, so it's kind of scary, but the House passed the bill that we talked about in terms of limiting excessive pricing. Right? They use the word, but it's not really definable. So we'll see what happens. It has to go to Senate. We'll see if there's any drama with that. But that was the only real thing that we got. Otherwise, it was back and forth. You got real estate data, and it was not that bad. But as you could see, we just chopped around, and there was a lot of VWAP action. If you didn't see that video the other day, I strongly recommend that you watch it because it keeps playing out like that. So that's the basics of today. Now, let's get into the good stuff. What are the next catalysts? So tomorrow, this is going to be one, and this is also why I think we actually may get a lot more activity, and then the volatility could increase from here, but you have a huge options expiration, literally across the VIX, the SPY, even like HYG, there's going to be probably about 50% of the open interest expiring. Now, why is this important? We saw this in 2021. We've seen this already this year. Anytime there has been a big option expiration, you have had a huge move following it. Does that mean tomorrow is going to be a big move? No. What it's saying, by the time we get into next week on Monday, well, we're really going to see what's going to happen. So let's look at a couple of days in options expirations this year. You'll see, that's why I'm trying to tell you, there could be a slight delay. But first option expiration this year, January 21st. And what do you notice? The day after we bottomed out, chilled out, and then it went back up. So it wasn't too big, but now February 18th, remember, this was a big options expiration because now we already have volatility. People were piling in on puts and calls. And then really after February 18th, that led to another 4 days and then us hitting a new low after January. Then you have March 21st. And now that's after the invasion. We had a little bit of the run up, but what do you notice? It allowed us to actually get back to the highs in the next few days. And then April 18th, you notice big option expiration. Next day it went up. There was like 2 days of green. And then that is what started off, well, where we're at today. So a lot of money. People have been going back and forth. There's a lot of stuff expiring tomorrow. So after that, whether it's 1 day or whether it's 5 days, we're probably going to see a bigger unwind, meaning we could probably see a bigger move up or down. So that's the first one. That's tomorrow. Let's see what happens. But now the second catalyst, next week, you have Jerome Powell in the minutes. You're going to get a lot of economic data, service PMI, manufacturing PMI, real estate data. Even real estate data today helped kind of lift us up a little bit. But now the minutes, that is Wednesday next week, and pretty much tomorrow will be an opportunity to break through that 385. We don't have to, but if we do, that'll say something. But pretty much what I'm trying to say here, we're probably going to stay within a tighter range up until the minutes. And if there's going to be something that's going to allow a big run up after all the premiums expired or a big rundown, it'll probably be those minutes, especially if there was something Powell didn't disclose to us or kind of signal. So that's the big stuff. That's what we're headed into. And really at this point now, it's already, we're already right near the bear market on the S&P. NASDAQ down 27%. This is where people are saying at this point, as stuff develops, a lot of options expire. You have a lot of people exhausted. You might actually start seeing now the moves pick up and get a lot larger. So there is that. And now I already told you the downside is volatility may get bigger. So brace yourselves, but we could also see some upside. Be hopeful, be hopeful. But there's that. But now let's talk about the options, man. I've been trying to warn you. If you don't know Uncle Answers, this is Uncle Answers. He's a great guy. He's my uncle. But he says men lie, women lie, the premium don't. And if you've looked at the option premium, it is scamming you right now, okay? I'm telling you this. I love options. I've traded them, but we've been seeing just crazy moves. You can sneak some in there. There's Target. We hit like a 500%er there on Apple. You got the HD, and those are great. But guess what? Those are all weeklies. Those are not safe positions. If you're willing to take the risk and lose it all, you could play it. But even then, the reward isn't always there. The premiums and insurance is high. So what we've been saying is just be very, very careful and understand your risk to reward, but understand your break even. I'm telling you, we could have ignored this in 2021 with the break even because things would move. Premiums would go crazy. You could still flip it, ghetto spread it, whatever you want. But break even is literal right now. I'm telling you, when the market makers are pricing it, look at the strike price you're buying and look at how much you're paying for that option, because that price, that break even price, that means the stock has to move there to make nothing, to zero. That's why even if you hit it big, you're making like 100%, the premiums are really high. Here's a awful example today. Kohl's was down 9%, but literally every single option from the open, it didn't matter after they bounced. I made a small $18 put play to see if we get a continuation. Absolutely clapped, but $18. Hey man, keep it small. But you'll notice all of the puts were down, every single one. And that's because Target, that one actually hit. If you got puts, God bless you. It ended up working, but with all the volatility and people dealing with the downside and new lows and getting worried, well, the premiums start getting jacked up. The break evens are literally through the roof. So this is what happens with some of the options. So be very, very careful. But now I have a solution for you, but it's not really any better. You're still going to take risk. It could still go against you, and you might actually lose more than an option. You got to understand, what is the benefit of an option? Benefit of an option, you're going to get a lot of leverage. Small amount of money can get you an equivalent move to a big amount of money. We actually did this today. I made a SQQ. We got a nice play on it, but I even have that mini or that micro NASDAQ future at one point, and even by the end of the day, they moved exactly the same. So think about it. One of them cost $100. One of them required $5,000 of capital for the margin. So understand why people trade options. You could put a small amount of money in, get the leverage, and benefit off of it, assuming things are priced a little bit more favorable. And then the other side is that you could only lose what you put in. So the solution I'm going to give you is going to require more capital, and you could actually lose more. Well, you could have pretty much unlimited losses. What is the solution? Go with the shares. So we've been talking about the futures, and yeah, you could do that. It's really risky, but at the end of the day, you can just go with shorting the shares because there's no premium. You could at least make dollar for dollar, and at the very least, it's a little better than what we've been seeing with the premium. So let me run you through this play and you'll see what I do, but you could kind of understand a little bit that you can find ways to manage your risk. Now that I've told you the amount of money it requires, also unlimited downside, we got to find a way to negate pretty much the downside. Or again, if you have margin, and this is what I'm saying, it's risky, not a recommendation, be careful. And eventually you're going to see me do this. You'll watch me get clapped eventually. So we'll be able to see where this goes wrong. But at the end of the day, there is some things you can do to limit it. So what did I do today? We were talking about AMAT. They had earnings. They have most of their customers from China, even TSM, they did bad, Samsung. So I was like, all right, maybe they'll go down. And honestly, just the nature of the market, it seems pretty good to go short in some instances. And they look like Cisco. But I decided to go short on the shares. So it was around power hour, a little bit before, I went negative 100 shares of AMAT at 112.11. So I shorted it at 112.11. And now that I'm short, every single penny or dollar it goes below that price, I will have the ability to profit. And now here's one of the best parts. Just like the futures and even in this, if you're early, you could still benefit off of it. You will have to hold the loss, though. That's going to be up to your budget and mental. But essentially, the idea here is if you're like, yeah, it's going to go down, and then the next 2 days it goes up, that position will go negative against you. But here's the benefit compared to what you're seeing with options right now. If it comes right back down below that price, you'll start making money. Whereas some of these options, that didn't really happen. So keep that in mind. I'll show you when we get to the SQQ. But pretty much anything below anything below $112, I would start to make money. So I grabbed that short and then I waited a little bit till close. It was like 30 minutes prior and the options on AMAT were through the roof, even the puts. The stock was negative and didn't move. It didn't move at all. And the premiums were up 300 to 50%. That's what I'm telling you about the pricing. So I was like, damn, but the stock started dropping with the market. And I said, well, hey, I have 100 shares short. My risk is upside. I was factoring, hey, if they do bad, they'll probably drop 10%. If they do good, they'll surprise 10, 20% on the upside. At 100 shares, at $100, that means I would have lost around like $2,000. But it's unlimited upside. If the stock went to 150, I would still have to pay that. So what did I do instead? I waited when the premiums went down. These premiums were up 100%. They dropped and I went and I grabbed a call for tomorrow. Even though it's a daily, again, these are the ones that are moving, but I bought 2 of the 120 calls for 85 cents. And now why did I do that? I was already up $100 on the short position. So now I said, all right, let's see. We have earnings. I know it's going to be a big catalyst. I bought the call option and I bought 2 of them. So if it did go up to 120, I'm not really trying to make money, but at the very least, if I have that 120, I know I cannot lose more than $2,000 and boom, I put some level of cap on that play. So I liked it. It ended up working out. After hours, stock dropped. I covered at 105 and you could see it took about like an hour or so since we bought it right before close and I covered it after hours. That's the benefit of it. So I closed at 105, made like $650 or so, and then good to go. So this is what I'm going to be looking for with some of these plays. But like I said, this might work better. But again, you have to balance the risk to reward. Options has a risk to reward. Shorting has a risk to reward, even futures. And this is why I'm saying we got to find the doors and you got to be able to see what is more comfortable, but what is actually paying us for the risk we are taking of trading in this awful market. That's what you got to focus on. But like I'm saying, I like this simply because you can be early. Yes, you will pay for it, and then if you hold it too long, I mean, it can get out of hand. This is what happened to Melvin, if you think about it. So you got to keep that in mind, but if you are eventually right, you will profit off of it. So here's another play I made. I grabbed these SQQs today. I got them at $1.18. I absolutely stole them. We got pretty lucky on the timing there. Shout out to Graham. He was bringing this up, but I said, let's compare this to some of the futures that we're holding. So pretty much when I made the future trades, we're going to use the 60 calls for the SQQQ, and you'll see what I'm talking about. But a couple days ago, these things were going for like $6, even like $2 or $2 at like even when it started to drop, but that's when I made that NASDAQ short, and I went down on the NASDAQ short. At one point, I was down $1,000. Again, that is the risk. It goes against you. If you're willing to hold it, you're going to have to pay for it. But here's the difference. It came right back down. Now I'm up about $500-$600. I think this morning I was even up $1,000 on the future trade. But what do you notice about the options? They are all down still. So you could kind of see it there. And now this is the problem that I am talking about, where it's like, yeah, if we're early and it goes against us, I mean, with some of these options, it just may not hit the same. Whereas now with the shorting, we could actually benefit off of it. So we're going to mix it up. Doesn't mean I'm done with options, but we just got to be nimble and got to be fluid to pretty much respond to what we're getting, so we can make some good plays, baby. But that is pretty much it. Let us get into the plays, baby. I got a couple that I'm looking at. Honestly, I really only got one. I'm going to look at any of these plays, any of the momentum based on the earnings. Again, Ross got clapped. AMAT, I may want to double dip tomorrow. We'll see. There's going to be other plays, and it really depends on what we get. But now there's one that I really like. I kept talking about it today. I was considering buying a call, but now I'm like, maybe I should just go with the shares. But XLV, healthcare. The havens got bid today. So yesterday, there was a lot of fear in consumer staples and defensives. Like I said, everybody got a taste of the beatdown now, but healthcare and some of the other defensives started going up. I like where they're at. They're at a bottom. They have the ability to rebound and can benefit if people are worried. So I'm like, maybe it could be good, but I'm worried about the options and how I'm going to go about playing it. But I really think that could be a decent one for the call side while we're holding some of the other puts. And then secondary, maybe bonds. Again, TLT, it's been a little bit wild. If you've noticed, there's been catching a bid on there, but people are talking about it. One, people are starting to use it for safe haven demand, but now two, there is a massive short position. A lot of people have been shorting bonds, and people are saying, hey, if the economy really does get bad from here, we may actually get an epic short squeeze. But now here's the counter to that narrative, is that if we do encounter a recession or a hard landing, chances are you actually may see the rates skyrocket one more time. But a lot of people are arguing we're already kind of near the highs and a bulk of the damage has been done. Kind of like early 2021 when you remember that first run up when, what's his name, Michael Burry did all of that. So we'll see what happens. Those are the only two other plays. Otherwise, we're going to be monitoring everything else. We got the SQQs and we'll see what happens. But I'm feeling a little bit better now that we can find some ways to, cockroach our way in there and get some good plays in volatility. This is ours, baby, so let's get it. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, enjoy the little things, man. Like, I'm 5'6". I would be considered a little thing. I don't know. But nah, for real, man. Enjoy the little things in life, man. Let's go. Keep your peace at all of this. And remember, before you quit, I'd rather have you strategize. Today, this moment, the rest of the year, you got to bring back some strong discipline. Get the helmet on and strategize, baby. So let's go. But I love you. I'll see you in the morning. And let's get it, baby. Let's have a fun Friday. And let's get some plays.